Hello everyone, this is Teddy Kekstadt from Forex Trading Unlocked, and we are here on June the 13th, 2022 for a weekly Forex trading and cryptocurrency market analysis. We're going to go over all kinds of interesting stuff. We have quite the start to the week, that is for sure. And before we get into this analysis, we just want to remind you that this is for illustrative and educational purposes only. And if you have not done so, please subscribe to our YouTube channel or our Twitch channel, Forex Trading Unlocked, and share it with your friends also, and like the video, and also leave some comments also if you have a chance also, because it helps to with the search engines and for the algos to help promote our videos to encourage us to do more. So we would really appreciate that. All right, now with that, we're going to get to our live active screen. All right, we have the forex-trading-unlocked.com website pulled up, and we already have the market analysis workstation page pulled up, and we're going to toggle down, skip past the numbers. Now the dollar index last week ended on a high note, boy did it, and it certainly was set up for follow through today, and without a doubt, after taking a little bit of heat over Sunday night into Monday morning, depending on where you are in the globe and which currency you were looking, the dollar was taking a little bit of pressure, not much, but a little bit of profit taking against the dollar. But that's turned around radically, especially since oil originally was down, I think, over $1.50 to start the week off on Sunday night, and the Treasury bond market was pretty flat, even positive if I remember right for a little bit. But it has changed in a big way, and that is something that we have to pay attention to, because this 105.01 area here of this last recent high is a very big breakout area. Should we get above that, it's going to be very, very likely that the US dollar versus most Forex pairs is going to be doing really, really well, at least for the short run. Now, obviously, the bull market is in place. We had a correction that ended at the end of May, and now we are middle of June, and boy, is the dollar strong. Well, one of the main reasons, too, is because oil is also very strong as well. So between the collapsing bond market and the rallying oil market, that is why we have this. All right, so now let's get to the Euro US dollar to start off our nice little show today. All right, so we have very interesting follow through. We ended the week last week in the critical support zone, and as you can see, we opened up and really never looked back today. The market has bounced off of its lows. It is basically not quite, just a little bit below the midpoint of the range for today. I think what you're seeing right now in the short run is profit taking, since we have the European markets that are now closed for the day. I would not really get too hung up on whether or not this is going to stay here. I think what's most likely going to happen is that the Euro US dollar is going to continue to batter support. Does that mean that it's going to have a lot of it happening today? Not necessarily, but if the Treasury bond market does settle on its lows, I mean, it was, like I said at the beginning of this video, it was basically flat, and then all of a sudden it was down 2 points, and it was down 2.5 points, and we'll take a look at it as we get through this video. So that's the main thing you have to watch out for, is that as oil continues to creep higher and Treasury markets continue to creep lower, and actually they're not even creeping lower, they're starting off the week taking one on the chin in a big way. And as long as that continues to happen, I would be very mindful of that and pay attention to that trend. That trend is not going away right now. It is in full force. It's not just because of economic numbers. This is the reality of what is going on. You know, these trends are in place, and the repercussions of everything that we've done for the past year and a half especially is coming to roost, and it's going to continue to batter the market. So we'll see what kind of signals we have shaping up. By the way, oh, thanks, we have a little thing here, a little response on Twitch. Yeah, if you guys want to jump in on the chat, by the way, on YouTube or Twitch or even Discord. We have Discord up also. Don't hesitate to jump in on that one, if you will. Let's see, on Discord, let's see, I think I've got the right screen up. Okay, you should be able to hear me on Discord, and you should also be able to see the screen. You guys have been requesting for Discord. We got it up. All right, thank you. We got a few likes already on YouTube. Thanks, guys. You guys, we really appreciate that. All right, now let's get over to our chart once again. All right, so once again, we are having this, look at this, look out below support bashing time. Well, we have had that already happen today. If we take out this low that we established back towards the middle of May around 103.52, look out below is right. The Swiss is just trading below parity today. We're going to get to that. It's rallying very, very strong, and the euro is holding up pretty decently. It is one of the biggest currencies out there next to the dollar. It is the biggest one in the dollar index. I think that that's one of the reasons why you're not seeing such an overselling of this one right now. But the trend is definitely back to the bear. Remember, we had been talking about this rally that we had occurred in the middle of May going into June, that this was to be viewed as an upside correction, bearish lower swing low. See this last swing high that we had just a few sessions back? That did not take out the prior swing high, so by definition we came off a higher move low, we established a lower move high, and now we've been bashing lower move lows for 3 sessions. If that doesn't say bear trend written all over it, I don't know what does. So right now, yes, we are targeting this 103.52 area. If we get below this, folks, now are we going to parity at any time soon? Well, we could rock it down there. I would say you have to watch out if we have an accelerated rally in the oil market. Right now, let's see, we have the U.S. Treasury bond markets according to the CME site. And now this is always in a lag. Treasury bonds are down. Yeah, they're almost down $3, down to 132.29. That is a big sell-off. So down to 132.29. That puts this market at 132. Oh, let's put it right there. So if you look at this, let's change this to a yellow so you can see it better. All right, so the Treasury bond market, as you can see, we can't have this in real time because that's by law. You have to be paying for quotes and you can't broadcast it. Even the CME stuff is in delay. So, but you can see that the bond market is crushing new lows on the day. Remember, interest rates are a part of currency pricing, so that is giving strength to the dollar. And also, we'll go back up to here to markets. Let's see the energy sector. Crude oil is now up 60 cents on the day, and crude oil was actually down almost $2 earlier today. So that's a big spin-off on crude. This is also having an impact on the European cross rates. So euro US dollar, only if we were to get back above 105.69 would I say we'd be in a choppy trade looking for a rally to challenge this recent swing high. We would have to take out $1.0773. This is very unlikely this week, but that would target 109.20, as you can see on the chart here. So if this does occur, if we can get a rally up there, then this upside correction would stay in place. Right now, we had the slope of this upward sloping trend here on the correction. We violated a key upward sloping support line here, holding this, channeling this correction in place. Now we've fallen through it. That correction is over unless we are establishing a lower move low that will stay above this 103.52 area. If we can do that, and I basically might as well just do this, put a trend line here and through the low of today, because if we take out the low of today, well, all bets are off, baby. We're going to be definitely trying to slam this market down even lower. All right, so let's take rid of that one. Now let's go to the British pound US dollar. So if you liked what you heard about the euro US dollar, if you got any questions about the euro versus other crosses, don't be afraid to ask on Twitch or on YouTube or on Discord. Let's see if we got any right now. It doesn't look like we have any on any of these, but okay, that's all right. If you have any questions about any types of exotic pairings also, folks, don't be afraid to leave a comment, a question in the chat, or even on the video in the other section too, if you're watching this after we've been done with the live stream. So definitely we try and answer those comments as well. Those help us with the search engine. We appreciate any of that type of interaction that you can give us. All right, so British pound, US dollar, this one's on its knees also today. This one did make a lower move low on the daily basis. Very bearish now. This critical support zone, it settled below this on Friday. So after doing the same thing like the euro, it took out the upward sloping support line holding the correction in place. The last few sessions in the euro were slamming that market lower. This one's been trending lower now for 5 sessions. It made a lower move low on the longer term scale for the weekly, more in the daily and the monthly. So that's a big deal for the pound US dollar on a daily basis for that kind of momentum. We would have to come back above this 124.31 area where we had this last swing low. This would put us into a range bound area up to 126.71. Currently, with the collapsing bond market in the U.S. and the rallying crude oil market, I don't see this getting above 126.71. I do see a possible bounce back up through this critical support zone, maybe piercing 124.31, but I'd be very mindful of the fact that I don't think it can get above this 126.71 area. In fact, I would even use this new downward sloping resistance line as a new barrier that will kind of guide you for when you can, as you breach resistance, if you will be held back. So if they breach through resistance and take out this downward sloping resistance line, then I think you have a really good chance at sparking a rally up into the pound US dollars. So let me see if we have any questions out there on Twitch or on YouTube. And by the way, don't forget to hit that Twitter share and also the likes and stuff like that on social media, so you can tweet out to everyone that our video is going live and help us spread the word about Forex Trading Unlocked. And don't forget to go to forex-trading-unlocked.com also to the website. All right, so as far as upside potential, we know that it would have to get to this range bound thing to get this other major then it wouldn't be a new correction. It would be a new correction if we were getting up through this resistance. Remember that since we've made lower move lows today, on a longer term basis, we came off this low, made a lower move high, and now we've made a lower move low. This solidifies the daily trend in a big way that downward momentum in the pound US dollar is very prevalent. Now US dollar CHF, boy oh boy, like a balloon underwater rally. Did we get follow through today? We settled right around just below key resistance at 98.72 on Friday. We had bottomed out very well at the end of May. We took a little time. It was a grind, but this area here was a nice Fibonacci area, very critical support zone for a solid swing high. Okay, so that means that for the longer term, if we were to go back to challenge parity, this was a fantastic area for us to find the market to bottom out and then continue higher. So right now, with this velocity and momentum, is it likely that we're going to pierce parity anytime soon? We could pierce it today. Who knows? We may not pierce it for another 2 weeks. Right now, I think you have to just be mindful of the fact that this trend right now, especially as crude oil rallies and the U.S. interest rate market is collapsing, that this market will most likely maintain a very staunch bullish trend. Now, once it gets above parity, I think you're going to start to run out of this type of extreme velocity and momentum. So I think once you get above there, you're going to start to see little pullbacks and little basing areas, and then pierce resistance again. And I think the steepness of the curve will start to even out. So right now, things are very volatile, and it's definitely looking like it wants to really pierce things up that way, and I believe it will. I think there's no reason why you can't assume that this trend right now is going to stay intact. Now, if you want it to fail, there's just a couple things that we're going to have happen. One of them would be we'd have to have a huge sell-off in the oil market, and we'd also have to see a monster rally in the bond market. As far as having a monster rally in the bond market, I don't really know what kind of potential you have for that anytime soon, especially with we have a Fed meeting coming up. We know that there's another rate hike coming up, and as far as how much of a hike, it we know that a quarter point is definitely on the table. Most likely a half a point is what they're going to do. Now, because inflation has been, the numbers are starting to come out, and the Fed can no longer deny, just like the Treasury Secretary in the U.S. has said, yeah, we did get it wrong. Well, duh. Right? So if you agree with that one, any of those comments about the Fed or the Treasury Secretary, we would love for you to leave a remark in the chat room or give us definitely a share or a like on that note. It's amazing how they're backpedaling now. So, but that's all in hindsight. The question is, what are they going to do now? And I don't see them laying off the interest rate raising stance right now anytime soon. So with that being said, most likely we will run up to parity sometime within the next, could be this session or it could be sometime in the next week, could even be next week, but it's very unlikely that we are going to come back and fall below this last swing low here that we established back at the end of May. Now, if we were to do that, well, that would change all kinds of other scenarios, and until we have any type of movement down towards those levels, we're not even going to talk about it or waste our time, are we? All right, now let's talk about another balloon underwater market. This one took a lot of heat overnight. It opened strong, and then all of a sudden it wasn't looking so good. But look at it now. It's hanging in there. The US dollar, Japanese yen definitely was looking to please early today. It got as high as, let's see, the high today was 135.19, and now it's trading 134.01. It's a full basis handle down below its highs, and it's not that much lower on the day. This market is just taking profits. Let's take a little Fibonacci thing here. Let's just, for hypothetical stake, let's say that a short-term high is in today. Well, if we have a 0.382, we'll get down that far. If we get to 50%, we'll get down to 130.74. And if we have a 0.618, we'll get down this far. All right, so somewhere in this area here, should we top out today, would be where we're looking for support. Okay, I doubt that this level here at 129.61 is going to be reached anytime soon. In order for us to come back down into this area here, we would have to have a huge sell-off in oil and a big rally in the Treasury bond market. Now, there is something that could happen. If the Bank of Japan decides to defend their currency, which back here, when we spiked high here, this was when the Bank of Japan came out and said, if we get to a 130, we will defend our currency and stop it from collapsing. All right, well, 130 is right here. Let's set this so it looks clean. All right, so as you can see, this is the line in the sand that the Japanese drew as far as when they were going to defend their currency. Okay, so when that happened, that was announced on this day right here. The market topped, and we had a 3-day correction. Okay, well, that didn't do very, very much at all. It just really put a pause on the market, and then all of a sudden the trend was that strong, and the world's like, okay, well, that's great. Japan's going to defend their currency. Very, very, very nice. Well, then we got to this little spot right here. And this is where it gets really interesting. So remember when I said that on this date right here, this was March 28th, 2022, when this market topped out and then pulled back. This was when the Bank of Japan, the Finance Ministry of Japan, were all about, we're going to defend our currency. We cannot allow it to collapse. And this is where I'm going somewhere with this, so please pay attention. And then the rest of the world said, oh, geez. And then we had a little profit taking, but then momentum surged it up. And we get to this little arrow here. What happened here? Did the Bank of Japan do anything? Did the Finance Ministry do anything? Well, yeah, we did. We had something that really doesn't happen very often when it comes to the Japanese and anything, especially business. And once they've said something, usually you can set your watch by something that the Japanese say they're going to do. Well, on this day here, in April 20th, when the market peaked, the market started to be so close to 130, and they're thinking, oh, they're going to do something. Well, the Ministry of Finance in Japan said, yes, we are all for defending our currency. What does the Bank of Japan say? They say that we are going to use unlimited purchasing power to keep interest rates at a quarter point in their Japanese bond market. So, if you want your currency to rise because you are trying to keep it from collapsing because it's been trending lower, meaning weaker versus another one for a very long time, one of the ways that you would, besides buying the currencies, one of the ways that you would help to slow down that slide or possibly give a little strength to your currency would be to raise interest rates. You certainly wouldn't say that you're going to use unlimited buying power to float and hold up your bond market. In fact, the opposite would be true. You would sell your bond market and you would raise interest rates at the same time simultaneously if you wanted to defend your currency. That did not occur. So now we have a tug of war going on as far as what's going on in the economy and how to control and curb the collapse of the US dollar Japanese yen currency cross. So that started to get things into a choppy little thing. We breached 130. As you can see, we were bobbling around and it became a nice pivot. Looked like things were getting a little grim and that they didn't need to do anything into the middle of May, towards the end of May. Then all of a sudden, boom, we've come through here at 130 and we don't look back. Now I would say is if we do start to look back, it would become a support area, and that would mean 129.69 would most likely be the lowest extreme for this trade. I think 130.74 is probably about as low as you're going to see if we do see this market correct. This 131.81, if this trend is like very, very strong, we will bounce off this and we will not trade lower than that. Now the question is how will we get down here? The only way we get down here is if oil starts to sell off and the interest rates in the U.S. start to rally. But if the Bank of Japan was to raise interest rates, or at least say their unlimited buying of purchasing of their bond market, they would raise up to say maybe a half a point. Simultaneously, the finance ministry could do some other things as well. But it's the Bank of Japan that really needs to act. Should they do so, well, then we have a new story going on. And that would for sure put us most likely into a situation where we would test this area for support. And then the key question would be is how much overtaking power would our U.S. Fed have by them raising rates? See, that's the other trigger too, is that we already got to this point here that our U.S. Fed is about to act, which is going to just give more pressure to on the Japanese yen and most likely propel this market up towards 136. If we get another half a point in the U.S. Treasury, if the U.S. Fed raises another half a point with an expectation of still yet another full point going on the rest of the year to a point and a half, that would mean that this 130 area is definitely a base, because 136 to even 140 is likely. And that's not even saying that oil doesn't rally. If you start to see oil start to keep on going above 120 up to 130, 140, and even 150, well, then we're going to start to see almost a pairing of where we're going to see oil at 150. We could see the U.S. dollar yen at 150 as well. So I don't want to get ahead of ourselves, but these are just fundamentals you cannot discount. Right now, all technicals, you are technically overbought in the U.S. dollar yen, but you have been for a while. So for you to even think that you're going to be able to possibly get in front of this freight train and short it, I would really wait for a big change in the fundamentals. If we don't have that, I don't see how you're going to possibly have the ability to get it off. So that's what we'll be watching. As soon as there is a remark from, believe me, the Bank of Japan or something like that, we are going to be extra releasing that on Discord, on YouTube, on Twitch, on our internet to all our friends and foes out there, letting you know that this is what's going on, because it's a very big indicator for what is happening. All right, now let's go to the Australian dollar, US dollar. We have a couple more Forex markets to get to. Before we get to the cryptocurrencies, I know you want to look at the cryptocurrencies because, geez, look at the world is going on in that thing. Well, of course, we know what's going on there. The greater fool theory is falling apart at the seams. So, all right, Australian dollar, US dollar. This market also on Friday settled in this critical support zone, settling just above this previous higher swing low. Today, you can see that the market opened up and boom, it pounded support. It's coming back a little bit. I think you've seen a lot of profit taking. What's going on there? Remember, this market's been sliding for days. Right now, we are looking to see this market, if we get a retracement, to come and bash up against this downward sloping resistance line. We do not really see anything as far as a possibility to get this market higher than that. This key upside breakout level at 72.84 must be breached in order for us to even remotely look at an extended upside target here of 74.70. Right now, we are looking for this. We have a sell rally forecast going on, and we were looking for a test of 68.29 down here. A failure from here, the gloves are definitely off, and we have a full-out brawl as the bears just pound on the bulls and drag this market down towards, I would say, if we fall below 68.29, there's a really good chance that we'll be at 67.5 in a heartbeat and probably get down to 66 even within the course of probably a week to a week and a half. This is a very bearish indication for this market that the overall trend is really, really excited and wailing on support. The currencies around the world and economies around the world, everything that has been done over the last year and a half, it doesn't matter what your political take is math. You can't shut everything down, and definitely since they were locked down and mandated not to open or slow to open, this is what the result is, and it's getting worse, especially because we have geopolitical turmoil. China's not looking very nice with Taiwan, North Korea. Here's another thing you got to think of. McDonald's sold everything out of Russia because of the sanctions and blah, blah, blah. That's all fine and dandy. That means they also think that there's a longer-term prognosis that we will not have good relations with Russia in any capacity between the United States and Russia for a very, very long time. And most likely they know a lot more than most people do than what's coming out in the news. What else did they do recently? If you haven't been paying attention, McDonald's is also selling off their South Korean operations. See, we have franchises in the United States and all throughout Europe, but in Russia now it's all one entity is buying McDonald's out. They were run by the corporation. The corporation is going to be washing their hands of that whole area of the world. Another spot, once again, is South Korea. You don't think South Korea, this means something? Absolutely it does. It means that they really do believe that if this Ukrainian-Russian conflict does not end anytime soon, and most likely it's not, and this Chinese-Taiwan conflict continues to escalate, which it will, and most likely become a very, very, very horrible problem for the world, because the United States is now engaged in something they shouldn't be doing, because it's not a NATO issue to begin with, and we are just dragging ourselves into what will be like, this is almost like getting dragged into Vietnam. And once again, we don't belong there. We definitely don't, not at least not for our interests. It's not good for our country until we stabilize. We're making ourselves weak. And this is going to propel these currencies. It's going to keep on happening. Kim Jong-un is most likely, once China kicks up its heels, they're going to attack South Korea. Why would McDonald's pull out of South Korea? It's one of the most industrialized places in Asia. It is also one of our key technology trading partners, commerce partners, financial partners as far as Asian countries go. The United States does a lot of business as far as on trading and stuff like that. So this is a big deal. If McDonald's, when McDonald's went to the Soviet Union and went to Moscow, that's when there was a sign that the Iron Curtain was going to fall. I mean, the next thing you know is Monsters of Rock went on tour there, So that was a different time. That sparked a whole new era. Well, now McDonald's is pulling out. So usually you can see that the industrialization of a country and the moving forward and westernization of a country is when where McDonald's goes. McDonald's is leaving. That's obviously a sign in the other direction. So remember, the world all functions on signs and symbols, and this is a sign right there. All right, so Australian dollar, we know that this thing is weak. Now let's look at the New Zealand dollar and then the Canadian before we get to Bitcoin and a couple other ones. All right, New Zealand dollar, real quick. Is there any questions on the chat on Twitch? No. Or on YouTube? No, but we got a couple more likes. People watching, love that. Thank you for the shares. Keep it up, folks. We appreciate it. New Zealand dollar, this one here is hammering support as well. This one is bouncing off its lows a little bit, but if there's a weak currency out there versus the dollar, New Zealand dollar probably will be the one to watch. Even if Australian dollar starts to stabilize and trade sideways or even gets a rally going, I don't think one in the New Zealand dollar is very sustainable. We could probably maybe butt up against this downward sloping resistance line. I think the only way you're really going to do that, though, is by attrition if we start to go sideways. More likely than not. I don't see any rally. It is very bearish below the 65.78 area. If we take out the 62.17 area, boy, look out below. Now, are we going to have a move like we went from here back in the beginning of April down into the middle of May? I don't know if that's how big of a move we're going to have, but I wouldn't doubt that you could see a move like we had from here down to here, you know, so that would be another move like this following through once it gets, you know, basically I would say we're halfway there, which if that's the case, if we're at 62.17, then that puts you down, what would that be? That would be, let's see, 62.17, that's 360, so basically 350. That would put you down in the 59 half area as far as where you would find some sort of short-term bottom on the, that will hold the market up for a corrective move such as this one. That seems a bit extreme. However, New Zealand has a lot of political policies and economic policies that their economy is collapsing. That's just the reality. Is they have resources, but their economy is collapsing. So, and there's no chance of seeing any relief in that anytime soon. All right, so we have the critical resistance zone that the U.S. dollar Canada had probed into on Friday, but settled below it. But boy, look at this. Once again, dollar strength is ripping up its heels. We actually pierced 128.65, but we did not get through the 128.88 or even touch it. This is our upside breakout level. If we can pierce this, well, U.S. dollar, Canadian dollar strength for that trend is definitely in play for sure. It's undeniable. Overall long-term trend, this one was kind of neutral to bearish, but right now, because of the accelerated rate with the accelerated rate of the fall in the U.S. Treasury bond market and the rally in the oil market, that is helping to escalate this U.S. dollar Canada. I mean, you can see that this was a balloon underwater kind of rally. This actually, by the way, is a high probable Japanese candlestick pattern, which if you want to learn how to trade that, you go to on our website to products and services, go on to high probable Japanese candlestick patterns. You pull up this page here, and there's a video, a little bit of information with a buy, share, and preview, a little part about the book. We would obviously appreciate it if you buy the book. So, all right, just for that little plug. All right, anyhow, so if we get above this upside breakout level, all bets are off. The bulls are definitely in firm control. Then we would look for a challenge of the 130 to 131 area. I would say it's going to get dicey and probably be a big swing trade. So if we can close or at least settle a couple sessions above $1.2888, then I would maintain a buy break forecast, especially if the Treasury bond market continues to hammer new lows. All right, now let's go to BTC/USD. All right, let's hit the cryptocurrency market. Boy, is it taking one on the chin today, huh? How about that? Cryptocurrencies, now they are Bitcoin. I've been saying for a long time, it's a lot like the dollar index, if you will, even though it's really not an index. Hey, Gary, you're on YouTube. Yes, I can cover gold. We'll do that after we talk about Bitcoin, all right? Just give me a couple minutes here. So Bitcoin is getting hit really hard. You can see that it took out the swing low that was set back in May today. So we made a lower move high, and now we're making a lower move low. Is it over on the day? Well, Bitcoin and the whole cryptocurrency industry in itself is imploding. You know why? Because people need money. Inflation is happening. Remember how they said that cryptocurrencies was going to be your hedge against inflation? It was going to make everyone a billionaire and what have you. Well, you can't use Bitcoins and everything else to buy most things, so people do need to buy stuff. So what are they doing? They're selling off their digital assets faster than they can either produce it or trade it or whatever. So, and I think that is what's really going on with Bitcoin. Does that mean it's a fire sale and you should buy it? I don't know. Maybe if you're really bullish on Bitcoin, maybe that's what you should do. So let's see if this is any indication of what's going on in the rest of the industry. So Bitcoin, how low can it go? Well, it's already tagged down to what was the low today. The low today was 22,600. I was looking at after we took out this low, I figured, yeah, 22,500 would be around where you could get down to, and well, we're trading just above that right now. So a good bounce. I think you're probably going to see a lot of profit taking right now, and I would say maybe the momentum on the day is over. As far as are we going to try and pick a bottom? Absolutely not. But let's see how the other cryptocurrencies are holding up. Okay, so Ethereum, this is a totally different story, and we'll tie this in after we get to the gold story. All right, because we got to really get back on the track with that one. So all right, so for Gary, we're going to go to XAUUSD gold spot. All right, so Gary, I think you asked about gold before in one of our videos, and we appreciate any comments you got, even questions and criticisms. But right now, what do we have forming here? Right now, on the daily for gold, we have a negative signal forming. Has not happened yet, but it is forming. Okay, so let's see what's going on here. On a trend basis, the overall trend is still intact. The downward sloping resistance line has not been breached. On the short run, we have this bounce that had occurred in mid-May, and as of if we go back off of these lows here, you can see that Friday it had set a higher move high and a lower move low. So that already put us into a neutral zone position. Okay. Then today we set a higher move high, and now we made a lower move low. So right now we have a lot of indecision going on in the gold market. Now if we were to settle where we're at right now, Gary, I would say that it's very likely that you will see gold trend slightly lower, looking to trot on support for the next couple of sessions. Would we take out this session in May? It could very easily happen. Right now, with the way the Treasury bond market is collapsing, and also with the way the yen is turning, I think that is what you're seeing here, is that as those currencies turn and as the interest rates continue to hammer support, that you're going to see a little profit taking in gold. So gold is definitely a store of value. It is a flight to quality. It's a hedge against inflation and blah, blah, blah. But right now, also, just like when you have a Bitcoin and stuff like that, people need cash. And I think you're seeing liquidations on a lot of things that you can take, things that are very liquidable. Gold is one of them. The overall trend is lower move highs and lower move lows. Obviously, in the daily, we had gotten into a chop fest, but this is just a correction to the upside. We didn't take out this swing high here. The last major swing lower move high that we had was at 1900 right here. So we need to really get above here to confirm any true long-term bullish strength, and I would say that anything below here, as long as we stay below this downward sloping resistance line as well, right through here, we already took out the support, so this one's negated. As long as we stay below this area here, we don't have a shot at getting above here, so this will keep us trending lower and looking for another touch on support. Now obviously I would use caution if you start to get a rally above here. I don't know how you trade gold, through what mediums, if you're using the futures, or there's different ways of trading gold, so I'm not sure how you're doing it. Just be very mindful of these types of extremes that you're going to have. Like today, it's a big sell-off, and a lot of it has to do with the fact that you have almost a $3 move in the bond market. So the volatility is heating up. It could dry up tomorrow for the next couple of sessions. Everyone could just be like, hey, we're just profit taking on Monday after Friday's rally. Could very well be. But if we were to settle here today, I would say it's very likely that we're gonna test support down towards this 1787 area. So as a defined target right now we got to settle here. So if we rally this afternoon and all of a sudden start to move halfway up here, especially if we get above this upward sloping support line that was here holding the channel intact, that would have us in a big neutral. So I'd be very cautious about trying to be bullish here. I'm more likely looking for it to be here, settle somewhere where it is right now, and then sell rallies moving forward over the next couple of sessions. So thank you, Gary. Really good question. All right, ETH/USD. And once again, we appreciate Gary and everyone else that likes and shares us and actually interacts with us too, because that helps us with our search engine rankings. All right, so remember when we looked at Bitcoin, let's go back to this one. So this one made new lows today, okay? As of Sunday night, it still had not made new lows. So this just occurred today. Now, I used to say that Bitcoin is kind of like the dollar index for the cryptos. It's not, but where that goes, it's a big industry leader, obviously, because of its size and weight. Now, Ethereum, and this is what scares me, is they didn't just make a new low today. They already did it a few sessions back. So I think that's where, when it comes to Bitcoin, is how much more is left in it. I would say that Ethereum is the dog, is the tail that wags the dog, and Bitcoin is the dog that does not wag the tail right now. So as long as Ethereum is trending lower, Bitcoin is going to follow. When Ethereum stabilizes and gets a bounce, I think you'll see more of a bounce in Ethereum than you will in Bitcoin. But I would say wait until you see a true bottom form in Ethereum before you start to get bullish on Bitcoin. And that's just the way the momentum seems to be. There's divergence. We know that Bitcoin is, obviously the scale is much larger. Ethereum is more practical in its technology base, and is also how you can offshoot with other cryptocurrencies and what have you. But yes, as far as momentum to the downside and bearish control, I do believe that Ethereum is holding this in place and pushing these lower. All right, now let's go to Xmr US Dollar. Now this is another one that is key. Now we have divergence here. This one is not making new lows. This is very key. Okay, so the same time that these other cryptocurrencies on May 12th, they bottomed. Okay, so we have Bitcoin that just fell, took out that low today. Ethereum took it out 5 sessions ago, and Monero has not made those new lows yet. This is the one where, and I've been saying this for a long time, this is the beauty of having a cryptocurrency like Monero. The technology is useful, and they're mindful of how it's being used and at its cost. Right now, this is at a very fair value. Basically from 180 to 240 is a good value for Monero. Looking to sell it from 280 up to 350. Anything beyond 350 is an extreme price in value. That's where you have monster slides like this that could occur. I'm not going to get into the technology aspect of this and why those mechanics work, but versus other coins, that just seems to be, it's dynamic. It has been holding that pattern, or that mechanism, if you will, as far as how it moves and how it sustains its rallies and breaks versus the other cryptocurrencies. And since it's doing it again, we're going to say good old Monero, you have value. And right now there's more people, if I have a reason, that if you're going to hold a cryptocurrency, this market here came off of what? It made a lower move low, it made a lower move high, then it made a higher move low, then it made a higher move high. So this market's kind of neutral, you know. I mean, when this one broke out of here, this correction was solid. Now this correction has failed, obviously, however, but that wasn't until it did this stuff here. And this is key as far as this keeps the trend very neutral. Now, does that mean that it's going to go sideways from here? It could. It very, very well could. But it does show that this cryptocurrency versus the others has these dynamics that you can play. So I would be looking right now, whereas we are in a sell rally forecast of Bitcoin until we see a turnaround in Ethereum. I would say with Monero that you can buy breaks. This is if you have a valid buy signal. I mean, I'd be cautious with your risk because right now you are trending lower. Every day has been lower for the last 2 weeks, but once again, we didn't take out this low of 115.21. Ethereum and Bitcoin both took out those lows, one today and one a few sessions ago, and this one is bouncing back. So this is where I would say if you're going to look for a buyer of any type of cryptocurrency right now, Monero is your dog. Speaking of dog, let's go to the Doge USD. This one, hammering it down to just a nickel. Boy, oh boy, this rock just keeps on falling. It is just worthless. Boy, I remember people who said, when it gets to 30, I'm going to buy a bunch of it. And, well, if you liked it at 30, you liked it at 20, you liked it at 10, how do you like it now? This one here, when did this one make its low? So this one took out that, they all bottomed on May 12th. This one did it yesterday. Okay, so we have Bitcoin that finally did it today. We have Ethereum that led the lead. Dogecoin followed. It was in between the two. Now, as far as catching a bounce here, you can see the corrections are not very sustainable here. I would think you would need a monster rally to catch a bounce in Doge, and most likely, I think everyone's learning that their Dogecoin ain't worth a darn, you know. So at this point, it's just yeah, it ain't nothing. It's just nothing. So will it ever come back? Probably not. So I think it's just a matter of right now. Anytime you do get a rally, if you have some, that's your chance to sell. That's just it, you know. So this one here, the technology has no reason to be sustainable or sustained. And this just has no reason. I mean, here we broke out of the trend, and all we've done is go sideways and make lower lows. So we can stretch this to here, and all we're doing is pushing it out, lingering it down. And if you remember Enron, the stock, if you're old enough or studied it, everyone liked that company, and they were buying and just feeding you all kinds of lies about whatever. Well, same thing is about these meme coins and whatever, and now it shows you that it's the greater fool's theory with certain things. You got Luna, now you got Doge, which has just been the lingering dog, and I know there's people that are like, it's going to turn around, Elon Musk loves it. Okay, all right, good luck with that one. I hope it does. I do truly wish that everyone can prosper, so I hope that one day it does turn around and you guys that are taking heat are all happy and buying Lamborghinis. But right now I see this thing is going down to 2 cents before it goes up to 10 cents. But you never know. We'll see. Maybe we get a bounce. All right, do we have any questions here on YouTube and Twitch? No, we got a couple people following. That's cool. All right, so let's continue on. Let me see where things are going right now. Okay, boy, do we have some interesting stuff going on. All right, so let's go back for a flyby around the world in the Forex market, because since we started talking, a lot has happened. All right, so remember we saw that euro that started to come back and looked like it wanted to do something. Well, it's back on support. In fact, let's look at it on the 30-minute. Yep. 30-minute, not looking so good. It looks like it doesn't want to stay up anymore, does it? All right, let's go to the 15-minute. Made a lower move high, and now it is compressing, going lower. Compressing and depressing. All right, so Euro US dollar, very, very weak, riding this trend. Let's see where the energy market is. Okay, so crude, get an update here, is now up 130. So since we started the webinar, we've had a little bit more of a rally to the upside in crude, so that's helping the dollar. And now let's see what's going on in the interest rate market. So it's 12:02 already. There's only 2 hours, less than 2 hours left before they close. 229, almost 3 whole handles. Yeah, this is the shakeup here. I'll tell you what, you just cannot fight this one. It's amazing how this one is trending lower and lower and lower, and it is just pounding it, you know. So I mean, I can't see how this is going to stop. You have oops, that's that one we go. All right, so euro US dollar. Will we get below 103.52 anytime soon? I think you got to sell rallies right now. We may see some more follow through after the bond market closes. If they settle down like they are, and there's expectations of more follow through to the downside with interest rates or the bond market, then yeah, it's very likely that things could actually accelerate after 2 o'clock. So let's see, British pound, US dollar, are they hitting support again? No, they're actually, yeah, they're starting to get lower again also. So remember, this one had made a lower move low on the daily basis, and it looks like it really wants to pressure support some more. So I think that what we've seen over the past couple hours is just a profit-taking bounce. I would say that there is a bull trap setting up right now on the intraday level for a lot of traders. Be careful, be mindful of it. If you are trading this market, do not try and catch a falling knife. Right now, the trend is your friend, and the dollar is a raging bull. The US dollar Swiss, like a balloon underwater. This one has come back a little bit too since we started the webinar. I think that we are going to definitely see follow through with this one. If the bond market stays the way it's trading right now, and oil continues to make new highs, going into 2 o'clock, we may see an accelerated rally where we can get above parity today. I really believe that US dollar Swiss has a chance at making a run for higher move highs, more so than the euro and the pound have a chance of making lower move lows, meaning the dollar strength driving that trade. US dollar Swiss, I think you have a really good chance at getting above parity if these interest rates stay where they're at, and the oil, even if they just stay where they're at right now. And if the follow through is expected, I think you will see that already start to come through before the Asian markets happen. And then we'll see probably an acceleration into the Asian markets before we see a pullback and some profit taking on an intraday basis. So be very mindful of the US dollar Swiss momentum here. Absolutely, we are looking for this to continue. Let's see, anybody on Discord with a question? Nobody on Discord with a question. We got a bunch of people viewing on YouTube and Twitch. That's great. Thanks, guys. All right, so we've seen how the European currencies are going. Now let's go back to the US dollar yen. Remember how we were talking about this one got beaten up today? Well, now this one is the little engine that could. You look at the last couple sessions, only slightly higher, pressing on through resistance, not much of a body. Same thing shaping up today, but I don't know. I think that right now where it's at, I don't believe we're going to settle negative on the day. If the other markets are going to continue what they're doing and the U.S. Treasury market stays lower with a bias of more lower trading to follow through, I think we had a nice break to buy once again in the U.S. dollar yen, and I wouldn't doubt it if we challenge the high of, what was it, 135.9. Yeah, 135. Okay, so what was this number? It was 135.19.7. 135.197. There we go. Okay, so if we take out the high from today, do I think we're going to explode through it like we did a few sessions ago? Probably not, but I do believe that we have a good chance of taking out the high later on this afternoon should we close at 2 o'clock that way in the bond market. So be very mindful of that close and what's going on there, folks. It is definitely influencing the pricing of this market. So let's see if we go back to the hourly. Hourly, we had a nice bounce confirmed. Half hour, it's really solid. Yeah, things are looking good for the US dollar yen. Not that we couldn't settle lower on the day. However, I think that right now we are basing, and as long as you don't see a pullback in oil, if oil trends lower, sells off, and if there's a bounce in the bond market, maybe the trade for the US dollar yen is over. But if we get, like I said, right now we're almost down 3 full basis points in the US Treasury bonds, over a point in the 10-year. That's a big deal. It really is to start the week off. Usually when you have starts to weeks like that, you have a lot of follow through. And then here once again, yeah, see now even crude's even higher now. So now it's up $1.19. So even just as we've been talking in the past couple of minutes, crude has rallied like another 25 cents. It's inching higher. It's almost done for the day, but it's definitely influencing these markets. All right, so we're looking for that rally to continue. AUD USD, this market has been hitting support. Remember how when we started the webinar it was almost at the halfway point? Now it's banging support again. What do you know? More follow through to be expected. That's for sure. You know, and then we'll look at the NZD USD. More of the same here. Definitely not any change here. We're looking for this market to test the lows here. Now, will it happen today? I don't know about that, but we are getting follow through. And also we have the US dollar Canada. This one here. Look at this bull. It really wants to get, it's hovering just below the upper part of our critical resistance zone. The more we hang here, the more likely, if this momentum continues, we're going to take out this 128.88. Remember, if we settle above here, folks, that's not that we won't have some sort of pullback, but I would say you're definitely in a buy dip scenario, and look out, this bull train is going to continue. It's just that solid right now, you know. All right, so we have no questions on YouTube, no questions on Twitch. Got a bunch of people watching. All right, well, thank you very much. Since we have no questions, I want to remind you to go to forex-trading-unlocked.com. Check out the book High Probable Japanese Candlestick Patterns, which you can find by going to Products, Courses, and Services. Toggle down to there, hit that. Pull up this page. It has a nice little video on the book. Learn how to trade these signals. Preview the book, share it. We would love you if you do that. No matter what, please do that. And also, we'd love it if you would buy it as well. Of course we would, right? All right. Well, thank you very much for all your time today. I'm Teddy Kekstadt from Forex Trading Unlocked. And, oh, yeah, by the way, one other thing. If you haven't done so, please subscribe to our YouTube channel, Forex Trading Unlocked. Hit that subscribe button, hit that like button, share it on Twitter and tweet with everything else. And Twitch also, if you haven't done so, subscribe there and tweet that out as well. You guys have a great trading day. Look forward to seeing you again very soon. We will have some more videos coming out after the close today. We have a bunch of trading signals that are shaping up. We want to bring those to you, okay? Thank you very much. Once again, I'm Teddy Kekstadt from Forex-Trading-Unlocked.com. We will see you later.